Hello and welcome everyone to the week ahead commodity report presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know as we go into next week? We have seen hedge funds and money managers, they have yet again raised their overall net long positions in COMEX gold and silver contracts in the latest week. We have also seen hedge funds and money managers, they have cut their bullish wagers on crude oil in the latest week, as well as we've seen Trump's 300 billion China tariff threat sending the markets into a tailspin. In fact, gold prices rose last week back towards 6-year highs, notching their best week in 7, following a surge of more than 2% in the previous session as the US and China trade tensions soured further. Meanwhile, oil prices gained 3% on Friday, but that was after recording their biggest daily drop in 3 years, after US President Donald Trump vowed to impose new tariffs on Chinese imports. So with that, it's been an explosive week for gold here. We banked 390 points here on Thursday on our 2 long positions on gold. In fact, we continue to hold positions on gold as we go into next week. We also finally banked our long position on platinum for 700 points at the beginning of last week, and we're seeing some strong seasonal plays start to develop now as we head into this month of August. So with that, let me bring you over to the charts and I'll talk you through the key levels and the forecast for next week. First of all, let's move over to gold, and before we start going through the chart in a lot of detail, if you haven't done so already, I would encourage you to go back to last week's report on gold, the week ahead, and also gold asset of the day, where we discussed in detail on both of those videos. You wanted to look out for buying evidence on gold around the 1400 level, that we could revisit that zone, but as long as we held above the previous swing lows on a closing basis, we had the potential to tap the 1400 zone, but look at that as a buy opportunity. Normally the month of August is also very strong from a seasonal bias, but typically the FOMC statement, you can see some profit taking around that major news item, especially given that the 31st of July was the last day of the month, so you have a lot of traders taking profit, and then often what you see is the buyback that occurs as we go into the month of August. From a seasonal point of view, very bullish time of year. Normally gold outperforms both silver and platinum over the month of August, which again is why a research driven approach will help you a lot in these markets. We saw a lot of technical traders again were selling into gold after a breakdown of this trend line, looking at a very bearish scenario and expecting gold to then start to decline and top from these levels. Whereas this is where we at the Gold and Silver Club have been buying on this pullback as opposed to selling. We mentioned last week, look for the evidence of buying at this zone, 1400 up to 1415, and also be mindful that we are still creating higher swing lows on the chart. And as long as we don't break and close below those swing lows, then look for that evidence of buying to come in and take advantage of the subsequent rallies in price. And that's exactly what we've done. So 2 positions where we have banked partial profits. We've moved the stop losses to protect the trade. These are risk-free trades, and we can now take advantage of additional upside if we continue to see gold break out next week. So with that, I would still be interested though in adding to positions as we continue to progress throughout the month of August, as long as we continue to see this evidence of buying coming in for gold. So hedge funds and money managers, they have yet again added to their net long positions in the latest week. If you go over to gold on the weekly chart, this is the strongest close for gold in 6 years, and you can see now it won't take much for gold to break out and tap 1450. If we take out that level, that's where we could really start to gain momentum over the month of August. So what I would look at here going into next week, we have formed a bit of a doji indecision candle on Friday, but that is a result partially of some profit taking after such a significant move to the upside here on Thursday. We've seen over a 460 point move, so you're going to get some profit taking after such a significant move. Ourselves, we have banked partial profits as well, but we're holding the remainder of those positions going into next week. If we do get a pullback, so if we were to see, let's say for example, at the beginning of next week, if the dollar picks up a bit of momentum, is able to recover somewhat, we might retest, for example, the 1435 zone or even 1425 or below that 1420. We may not, but if we do, I would then look at buying to come in around that zone again, potential for shallow retracements, and then a further move back towards the upper end of this range, retesting 1450. And again, you want to look out for the buying evidence. You don't want to ever just buy in without that evidence coming in on the lower timeframes that the price is being supported. We saw very clear evidence of that last week at 1400s, that the buyers were supporting at that level, which enabled us to then look for more upside on this over Thursday's session. Where we are poised at the moment, if we were to just have no real significant retracements go into next week, that is where I would look out for, of course, Friday's highs to then be breached. You have an indecision candle which could then really start to build up momentum as traders start to FOMO in. They get the fear of missing out on gold potentially breaking above the 6-year highs, and this is where we could really start to follow through significantly to the upside here. So once we can retest 1450, which of course will be a magnetic level now for gold, so it's very likely that on additional follow through, that's the next level that we will just tap. And then above that, if we break and close above 1450, this is what really does open up the doors to some significant upside here, and really the next level that everyone will be focused on a break and close above 1450 is going to be 1500. There are some levels of resistance in between, but really the 1500 level is going to become very much focused upon as a magnetic level there if we can break and clear above 1450. In summary with gold, what we have seen here is a classic move at the end of July, which is that profit taking ahead of the FOMC statement. Overall, the interest rate cut was priced in to the market. So with that, we have seen quite a lot of profit taking after the FOMC statement, but that has provided a perfect opportunity to buy in on that dip in line with what we've been expecting over the month of August, which is a rally over this month. Hedge funds and money managers, they have increased their net long positions again in the latest week, and we also have the highest close that we've seen here on gold in over 6 years. So we have now banked 390 points profit over 2 trades, and we continue to hold positions now as we go into next week. Now, on that note, as I mentioned with platinum, we have now banked our position on platinum. We banked that at the beginning of last week for 700 points for the remainder of our trade before we've seen this very typical move on platinum, which is to sell off at the end of July and into the beginning of August, and for gold to outperform both platinum and silver for this month. So I'm much more focused on gold at the moment over the month of August. There will be opportunities, in my opinion, to get back into platinum here at lower prices, or even short-term sell opportunities, which we've seen around the FOMC statement with this breakdown in price. With that, I'll move over to silver. So silver has closed at $16.15 per ounce here on Friday. Again, over the month of August, typically gold will outperform silver. The gold to silver ratio is now breaking back out to the upside after a significant decline over the month of July, which does suggest gold will continue to, on a percentage basis and also on a points basis, be able to outperform silver. That said, we've had a reasonable pullback on silver over the latest week here, 1.2% move. I would still look out for the potential, if gold was to continue to rally over the month of August, if silver can break back above the neckline here of a potential bull flag formation, we might well be in for more upside here on silver and a continuation pattern. We don't quite have that confirmation at the moment, but I'm not ruling that out. If silver is able to break back above Friday's highs, Thursday's highs as we go into next week, so I break back above that 1635 zone, if we can get some follow through, this is where, especially if gold continues to break out to the upside above the 6-year highs, you could see silver start to follow suit as well. There will be correlation between the two. On the flip side, if gold does have any pullback at the beginning of next week and we see a little bit more profit taking on gold, this is where silver could then retrace and revisit the lower end of this channel, and we could potentially be in, first of all, for a tap of $16 and below that $15.76. Those are the levels that I would look at if we were to pull back here on silver. So that's also on the radar going into next week, but as I mentioned, I'm much more heavily focused on gold at the moment over the month of August, building positions into that market. Now moving over to oil, oil. We've had some great comments since last week's video on this, where we discussed in detail the potential for oil still to revisit the lower end of this channel, that we've been looking at those key magnetic levels for US oil of $55 and $54 per barrel, that we still saw the potential for oil to roll over to those levels. One of the key data points on that being that hedge funds and money managers had trimmed their net long positions in the latest week significantly, and with that we were anticipating the potential for oil to pull back. We discussed that that would be the ideal scenario, to wait for oil to pull back and then buy back in at lower ranges such as 55 or 54. We have now tapped the lower end of these ranges now for oil. You can see a bit of support here on Friday. Now, as we go into next week, we are in fact sitting at $55 per barrel, but the caveat to that being that hedge funds and money managers have again trimmed their net long positions in the latest week as well. I am actually looking for a meaningful low to come into oil in mid-August, but we might still get a little bit more downside until we have a resolution on the trade tariffs that the USA is looking to put on China. Oil is still very much on the back foot at the moment, and we could still go lower. I would actually be interested to see if Brent crude oil can revisit $60 per barrel again, and if WTI crude oil, if it was to break and close below $55 per barrel again, whether we can make a move all the way down towards these previous swing lows. And for me, that would be ideal if we were to be able to break down back towards those swing lows to establish a long position here. So back towards those 51 to 50 US dollars per barrel handle, in order to then establish a long position here as we continue to transition throughout the month of August and into September, which does tend to be a bullish period for oil. Now, as mentioned before, it's very important that you have an edge in the markets. You want to be aware of what your edge is. For a lot of traders, their overall edge in the markets is their ability for technical analysis, which is absolutely fine, but that's not an edge alone. You also want to incorporate other aspects of research-driven trading into the process that you're using when you're trading the market. So that would be made up of three key stages where you're looking at more data. So you're taking into account what the hedge funds and money managers are doing versus the retail traders in this market. You're looking at trade flow, market sentiment. You're marrying that up with fundamentals, seasonality, cycles in the market, and then you can utilize technicals to generate a trade idea. But that's a very different process to only looking at technical analysis alone. So of course, if you would like to join us at the Gold and Silver Club and join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you learn a research-driven process to the markets, and you get access to exclusive live trading room webinars. You also have access to real-time trade alerts, real-time trading research and market insights, access to our private members academy membership site, and also access to support and one-to-one mentoring. For more information, please just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do also make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.